The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 6th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Hey, let's make sure we have a great couple of hours, well, an hour together, and just simply a great day. And, of course, the easiest way to do that, it's always to remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. Oh, you bet your sweet bippy we are. We're going to go figure out what the bulls and the bears, what those buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to give us a call. You can dial in right now. Phone lines are open, 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tiger's Den, any and every and all pings will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 224 points. S&P's down 27. NASDAQ 100, the leader. Well, no, they're not. The semis are the leader to the downside, 2.5%, 40 points. The NDX is off 1 3/10%, or 102 points out there. So it is mean and red across the board, with the exception of the spot volatility index. It's up 28% at $3.65. It is well above its 50-day exponential moving average. So we've got kind of a mixed message here, at least short-term mixed message. Gold is up $2, trade out at $12.83, while silver is down by 6 pennies. Out here in light sweet crude is flat for the day. Leading the charge to the upside dollar-wise is Sinclair Broadcast Group up up $13, 29%. Digimarc Corp is up 17% or $8. Chipotle up 7. Lending Tree 6. To the downside, it's Booking Holdings. Kind of not a big surprise there, off $25 dollar-wise. That is only 1 4/10% to the downside. Amazon's off 21. Affiliated Management is off $12 or 11%. So things to look at. Of course, we want to look at what you want to look at. No requests just at this stage of the game. So let's just kind of do an analysis of the markets. Try to figure out what is the market communicating to you and I. First, where we begin. And today's information, the day obviously is not over, but I think really relevant and cool to assist each trader that is out there, both whether you're a bull or a bear. There's just some clear information that has been provided to you and I. What is that information? We've talked about this before. John and I looked at this in the Tiger's Den maybe a couple of days ago or so, and it was really the ES Mini out here. And the beauty about the ES Mini, this is the daily time frame chart, is the decoration that we have on it. And that decoration happens to be our daily TAS market profiles. Now, the beauty here is you're going to see, in essence, 6 green arrows, the Green Hornet, on my screen. And what those green arrows are representing is each time, inclusive of today, that sellers have been able to push price down to or below the bottom of its daily profile, also known as support. So until support breaks, in this case here, the clear level of support would be the bottom of that daily profile. That's 2894.50. If price were to close below that, then you and I could conclude, or at least argue, or make an excellent case that the trend to the upside is done with. At this stage at 1:11 in the afternoon, we cannot say that. Why? Because price is trading at 29.1775 out there. That is well above that 28.94 level. Now, I don't know what is going to unfold over the course of the next couple of hours out here. But what I do know is when the contract comes to a close today, you'll want to watch 28.94. Do we have any and if there's a close below that, then the signal here is a change in trend. If it doesn't, man, it just tells you that this trend is strong. Now, maybe you didn't need me to tell you that, or maybe you did, because in this case here, we have a very clear line of demarcation. It's something very specific for you and I to look at to be able to make a determination as to what the markets are communicating to you and I. Now, I mentioned short term, and by short term here, what we're taking a look at is the 30-minute time frame chart. Now, price was moving higher with less relative energy. It did that into the contract close on Friday evening. It was right up into the contract close. Of course, we have a bearish signal here. That was last evening's gap to the downside. But the market just simply repeats these patterns over and over and over again. And for those folks that were wondering what was the message of the markets out here, we can see that price was also moving lower, doing less relative energy right into this time period here at 21:30. That was 9:30 last night. That is the ES mini out here. Now, the bulls arrived to save the day, so to speak, at 12:30. For those of you that were up, maybe still celebrating Cinco de Mayo, even though at 12:30 would have been Cinco de Seis out there. But in any event, the market gave you and I a clear indication of a bottom that was there was no guesswork involved with regard to seeing some type of rally or counter trend rally. The question now is, can we find a clear pattern that this is just simply a counter trend rally? Granted, from a daily perspective, there's no way, well, you can make a decision. There's no way I'm going to suggest to you that the trend has changed. You've got to get it closed below the bottom of that profile. Now, we're looking at the ES mini out here to say, hey, do we see some kind of topping pattern? And the reality is, other than wave number 4, I don't see it as we speak just yet. And price is above Stevie's green line. Now, you'll notice that it turned from red to green. And when it turns from red to green, what it tells you and I is at some point in time over the coming sessions, we don't know how many, we're going to see price and our green line catch up to each other. It's really that test, which we don't have at 1:13 in the afternoon, that would tell us for sure as it can be, whether or not there's more counter trend or rally, whether it's counter trend, more rally to unfold out there. So that number is 29.10. That is going to change as each tick and each moment goes by out here. But so the ES mini, this is what at least Stevie's watching for, the 30-minute chart, to give us some type of real indication as to what its intent is. It's trading, or it has traded, inside of the gap that's out there, fairly large gap. But that's what we're going to look at. Now, we come back from this break. Let's go look at what else is it that Stevie's looking at. There's a number of things, but where we'll go to next, I didn't mean to do that, would be the NDX 100. And we'll take a look at the weekly time frame chart, because that's important too. This is Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So during that first segment, we were taking a look at the ES Mini, and just to really kind of round it out, and I was looking at the daily and the 30-minute time frame chart, but really another confirmation that the trend has not changed out here and that support has held. We'll be taking a look at the market breadth for the S&P 500 based upon its constituents and how they are trading as it relates to their TAS market profiles. Are they above their box? Are they below the box? Are they trading within the box? And we can see the statistics on the left-hand side of this chart if you watch this on TigerTV. For those of you that aren't, what we know right now is 172 of the 500 or so issues that are in the S&P 500. There are 172 that are trading above resistance. In other words, they've broken out. They're trading above resistance. This is with regard to the S&P 500 for a daily time frame. There are 127 that are below the box. Now, you'll see a green line and a red line on my screen. The green line representing the issues above the top of the box, the red line below the bottom. When you see a crossover, either bullish or bearish, bullish crossover is when the number of issues and its line goes above the decline or the issues that are trading below. For example, January 4th of 2019, you got a nice bullish crossover. There was a bearish crossover that occurred, short period of time, March 6th. Through the March the 12th out there. And then there was another little period of time where the market was consolidating sideways. Never took out the bottom of the profile. We looked at those dates, we looked at those days on our screen out here. So the summary is, the conclusion at this stage at 120 is market breadth is still very strong. So when you put the market breadth together with that Rhodes momentum indicator signal on the 30-minute time frame chart out there, it was communicating to us that it was one of the things that was communicating to us that the reaction last night thus far has been a knee-jerk reaction. Now, that's not to say that we don't have a top that is in place, and that's something that you and I are going to go ahead and take a look at. But we don't have any kind of confirmation is what I really want to be able to put out there to you, especially when we take a look at now just simply the components within inside the S&P 500 out here. And I had mentioned let's go take a look at the NDX. So the reason I wanted to look at the NDX, let me switch back to a different chart out here. Where did I put that? I think I might have stored this here. I've got two places here. So we're going to take a look at the NDX weekly time frame chart. Now, one of the reasons that I want to be observant of this and the potential topping signal that is out there is that last week we can see from a weekly standpoint that last week was week number 8 of a TD setup 9 count. Now, price for this week has to close above bar number 5 inside the NDX 100. Let me get my crosshair out here. I'll give you what that number is. This is what you're looking for, potentially looking for, when it comes to the Friday session out here. I know it's just Monday, but you're looking at a number of 76.30.52. If the NDX closes above that, we'll get count number 9. If it closes below that, these counts go out the window. So what I don't know just yet, and we don't know till number 9, bar number 9 forms, whether this is a valid top. Now, the reason why it's of issue is because when the NDX 100 made its most recent high back in August, it was with a TD setup 9 count on a weekly basis. So certainly worth noting. Do all 9 counts identify a top? No, some are hiccups, just like the one that formed on March 8th, 2019 out here. And actually, price was moving higher, which gave us that Rhodes momentum indicator signal on that October swoon to just a tad higher, bearish engulfing candle. That created a Rhodes momentum indicator top on a weekly basis. We do not have that pattern as we speak right now, but we do have a topping potential signal depending on where price closes in the NDX 100 come Friday. So with regard to the NDX 100, a couple other things we can do out here. One, let me switch to a different chart space so I can pull this over. Just as you and I looked at for the market breadth inside the S&P 500, we can do the same here in the NDX. And in the NDX, you're going to see that 36 of the 100 or so issues that are trading above the top of the box, and 23 are below. So in the rest, not the rest, but the majority, 39 left over, are inside the middle of the box. And so at this stage here, it really is buyers that have control. And they have control because the areas of the game where they control it, buyers that is, which on a daily basis is the bottom of its profile inside the NQ out here, hasn't even been touched, hasn't even been pierced. And that level is 76.26. So just like the ES Mini must close below the bottom of a box to say that sellers have finally broken the back, because up till today at this stage they're just testing the back and the conviction of the buyers. They are there. We haven't even gotten that test inside of the NQ. So we'll watch to see, and I don't know how this plays out, when this plays out, but we do know what to be able to watch for out here. So positive market breadth in the NDX 100. What you want to see in order for some type of bearish move, so to speak, directionally speaking, get going, you want to see market breadth totally fail out here. You want to see a bearish crossover. You want to see the back of the bulls broken. Well, we know what that number is. Now, that number is subject to change out here, but right now it is still present. So what else are we going to look for out here? Let's go take a look at the NQ. Now, by the way, the weekly chart on the NQ does not look like the weekly chart on the NDX 100. So we got a cash indice with one message. We've got a futures contract with another. See, we're only in week number 7 inside of the NQ out here. There's no other pattern. Price last week and the week before closed above resistance. That resistance was that TD setup line. That was the green line out here. That was the August 31st high, and that was truly a Las Vegas moment, because that number was 77.50 out there. And if this week, it's so old so far, old support, last week was a test, old resistance, that would have been that green line, was tested and rejected, and that was positive. Now, I don't know. So if price inside the NQ closes over that level this week, and I would jot that number down on a pad of paper, all you have to think about is the one-arm bandit out there and add another 7. It was 77.77. There was a little bit of change, but just leave it like that. Boy, that would be a really important message out here. So that's what I see when I take a look at the NQ. We know what to be watching for. It's not there. Inside of the Dow, I know that someone inside the den had asked a question because we were taking a look at the ES Mini, and Out here, I don't recall who asked, but Jose asked. Okay, so Jose, if we take a look at the Dow, so the Dow is broken down. There's no doubt about it. The Dow is, when I say there's no doubt about it, of course, what I'm referring to there is price got below the bottom of that daily profile, 26,332. Now, here's the interesting thing about the Dow. What I don't know is what the end of today's session is going to look like. But what I want you to understand is that we're at a hammer candle right now in the Dow Equity Futures contract. I wish I could tell you this is what the candle formation is going to look like at 126. Here, let me turn off the A to B equals CD pattern out there. Now you'll see it even more clearly out here. That, in essence, folks, if we get a hammer candle in the Dow Equity Futures contract at today's close, you realize we have a Gartley buy pattern that is in place out here, because we were looking at that 1-to-1 A to B equals CD pattern out there. So that will be important to watch. So even though the bull's back was broken, now you've got a potential buy signal. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, by the way, right now the ES Mini 2 is showing a Gartley buy pattern. Again, it's 1:30 in the afternoon. I don't want to make that call just yet, but you've got a hammer candle as we see it. You can see the 1-to-1 A to B equals CD to the downside. That's been established at this stage of the game. You get that bullish hammer candle out there. It's a Gartley buy pattern, which suggests a retracement of the A to D leg out there, but clearly we're bound the 0.382. I can just visually see that. I'm not going to go out there and measure that for you because it really doesn't matter until we get to the end of the trading session. Now, there was one other indice that one of our denners had wanted to take a look at as well. That was the Russell 2000. Friday's candle session was very interesting because we saw a break above the consolidation that's been in place for months now. But as that was occurring, from the lows out here in March, you can see it made it to wave number 7. That's letter G. If the high of Friday doesn't get taken out, then that's wave number 7 out there is in place. Price is moving higher, doing with less relative energy out here, but without a bearish reversal candle, it's just an interesting pattern and not something that you're going to go ahead and trade off of. Now, in the case of the Russell 2000, of all the indices out here, this is the one that is the strongest. And I don't buy that it's the strongest because it's the indice that is least susceptible to tariff issues out there. I think that's a crock of not a crock of French onion soup out there, but just simply a crock. There's all kinds of products that for all kinds of parts for products that are coming in from overseas and so forth. So I don't really think that's the case. If you're asking me what's the message right now of the Russell 2000, caution. Topping signals out here, but nothing bearish. No reason, certainly no reason to go short. Topping signal, but no reason to go short. And price was also, in the case of the Russell 2000, many of you might have picked up on that when we were looking at this chart here, but you're going to see well above the daily profile. The others were not above the top of the daily profiles out here. So the Russell 2000 is very strong at 132 in the afternoon out there. A couple other questions that have come in. Let me take a look here. One was the first one that came in was from Peak D. And the question here was, Zach, Peak, let me come back to that, only because I have the GDX up on my chart here. And the next question after that was from John in the Den, asking about what do I need to see for the GDX to give us a bottoming signal out here. So, John, one of the things that I would be most concerned with the GDX, and I guess that suggests that everybody should be most concerned with the GDX, is not focused in on the daily just yet, but really focusing in on the weekly. And from a weekly standpoint, we talked about a hammer candle that is potentially setting up for the ES Mini and the YM. 2 weeks ago, inside the GDX, we had a hammer candle. And last week, finally, but there was a close below the bottom of that hammer candle. And so out here, our expression with regard to that is when you close below the low of a hammer candle, if you're long, you're wrong. So for me, John, that is a resistance point. At a minimum, that price must regain. That low out here is 2067. If price can close above 2067 or 2038 as we speak right now, okay, then we can start looking at the daily, because that's old support should become new resistance. So if price can close above that, then it can say, I can influence, I could say, okay, it was a false breakdown, or maybe there's another pattern that's out here. But at this stage, I would be focused on the weekly. I think that has some pretty significant meaning to both you and I. And there is no pattern on a weekly time frame chart right now to suggest that the GDX has found some type of bottom. And it is completely different than the weekly chart for the gold contract out here. So there's a bit of divergence. What do I mean by that? Well, last week and the week before, on a weekly basis, set up that TD setup 9 count out here, which says there could be a bottom that is forming. Do I think that the direction of gold will influence a GDX? You bet your sweet bippy it will. Do I think that the direction of gold, if it takes out resistance, will just simply forget about that hammer candle inside the GDX? Most likely, yes. So we want to also, from a weekly standpoint, in my opinion, John, be looking at the weekly oscillator on change line, Stevie's green line, inside of gold, as well as profiles. But right now, 1294.90 out there. That's not much higher than where we're trading right now at 1283.70. So I would say, bless you, to myself out there. My apology for sneezing. And not that I could have avoided that, but I would be looking at the weekly time frame information out here to give us those signals, both inside gold as well as inside the GDX. Now, if I put the GDX up on my screen out here for you, I'm looking here. Are there any bottoming signals? No. Absolutely not. In fact, if there's anything that is out here, John, it is Stevie's red line. And prices below Stevie's red line. And we've already had a test of that red line. Remember the phenomena when my line turns from green to red or red to green tells us that that line and price are going to catch up to each other, which in essence is what took place 4 days ago. The bearish case out here is to have a falling price oscillator below zero. When you get that test, and then in this case a rejection, it is not good. It is a bearish message that is out there. And that, with regard to seeing price continue to trade below Stevie's red line at 2071. My apology, I don't remember what the weekly level was. I would watch this too, maybe as an early signal. I know that's not buying the bottom, so to speak, but you were asking, I believe, about proof. And this is what the GDX would need to do to prove to us that it has formed a bottom. Now, look, the month is not over out here in the GDX, but the monthly chart, what we are seeing take place here in the month of May, is not good with regard to the GDX. That not good is it's trading just slightly below that red line out there. I'm not going to worry about the GDX monthly chart, so to speak, when it is only May 6th, but it is another point of reference to say, be careful. Lastly, out here, I'll just put the GDX. We didn't show profiles on those charts out here. Here's the daily time frame. Let me get rid of that A to B equals CD pattern. And if price has found a bottom, if you are an aggressive trader out here, then you go fire away right now, assuming you're going to go ahead and use profiles, and you're going to ignore what we looked at, all of those other charts for the GDX. You have a brand new profile that formed today. The bottom of that box is 2027. You're at 2036. So if you have some other reasons to believe that gold is bottomed, some type of short-term time frame chart, then now would be the time to take that trade and to close that trade out or have a tight stop, so to speak. Probably it's within the average true range. Average true range is 43 cents out there, below the low from last week on Thursday, and that was 2014. Recognize there's also resistance here at 2130. Let's say you're not an aggressive trader and you want the proof that I just, delivered to you. Guys are the jury. I am just nothing more than prosecuting the case, so to speak, out here. If the GDX were to close above 2130, that would be a very positive sign because it's a bearish structured profile. And there's sellers hanging out at 2104 to 2130. This is Steve Rhodes with TFNN. That was your GDX and a little bit of Goldilocks as well. Be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got a question in the den from Pete D. Wanted to take a look at ZAGG. ZAGG is a ticker symbol. ZAGG is the name of the entity out here. And the question, if I didn't say it, maybe I said it, the question is it a buy? And so let's go take a look. Here's what we know first. And I'm going to start with the weekly chart here, Pete. And so we know that there was a swing point last week. This was a swing point from December 24th. And the volume there that was a week that began December 24th, by the way. That was 1.4 million shares. Now, really tough here, Pete, for me to say, hey, let's clearly just make a linear, that if we're going to take a look at the volume from what we know is a late volume week, how do we use that? Because, for example, last week the volume was 1.5 million shares. So was that tested with it? And it was tested with volume. There's no doubt about that. But gosh, I don't know if it was a real test of volume. That was 796. We're trading at 792. What I do know, Peak, is trading below that swing point from the week of December 24th is not what you want to see out here when we take a look at the Zaggy one. That's the weekly time frame. What's the daily time frame tell us? The daily time frame tells us, just like when we took a look at the GDX, that there's a brand new profile that is formed. And I'd wait to see how the day plays out for sure. I don't know how aggressive you are. Look, from a volume standpoint, a couple of days ago on the 2nd, it was moving down with 289,000 shares. You're already at 201,000 shares as we speak. So it just seems to me at this stage here, Peak, that there's still too many sellers, even though this is $7.92. It doesn't really matter what the price is. Well, it does, but it doesn't. There's too many sellers right now today here. Is price going to hold the bottom of that box at 793? Yeah, maybe. The structure of the box may be slightly tilted towards the bulls because the center's at 812 and the top is at 841. Have we seen a close above the top of a box inside of ZAGG any time recently out here? And the answer is, well, we haven't seen a close above the top of a profile really since February 11th. And we've seen the tops of those profiles act as resistance since February 26th. So another line of demarcation for you is a change in trend here may take place from a daily standpoint if you were to see a close above 841. Now, percentage-wise, between 792 and 841, it's a decent percentage move out there. But do you take it? So do we have enough information here? Let's go hunting for other possible bottoming signals out here. Let's pull over Stevie's Ninja Trader charts. Do we have the signs of a TD9 count? We don't. We could be a couple days away from it. So that would say be patient. Price basically trading below Stevie's red line right now. We know that's not really a good situation. So this says the daily chart here says not yet. Don't see a pattern. Now maybe you did a wave count. Let's do that. Let's just come from this high out here in the daily time frame for March the 7th. That looks to me to be the proper place. We've blown past wave number 7 or letter G. So that's not really the best place at this stage here. You know, where would my secondary count? Remember, when I do this wave count, it is not part of the Chapman wave. For that, you just need to follow Basil's rules and attend his courses and learn that, and quite frankly, you should. But in this case here, I don't have a count peak, whether it be D or G, to go ahead and say, yeah, okay, on a daily basis, it makes sense. If I do take a look at the weekly, here would be the bonus. And the bonus would be getting some type of bullish reversal candle this week. So come Friday. Now, the reason why it could be a bonus is that on a weekly basis, you did get to count number 9 last week. Even if there's a lower low today, that does not negate this pattern out here. On a weekly basis, has the 9 count been helpful? Well, yeah, at the top out here, the most recent on a weekly basis, June 29th, that was count number 8. We know it's bars number 8, 9, or 10, where either the high or low can be made. So you've got some potential here, is what I would say. But with price well below the red line on a weekly basis, which is 850 right now, and you're at 792, you'd really like some proof. So a bullish reversal candle this week, and 850 would most certainly do that. Then I would say, well, the answer to your question today would have been yeah, but I can't see into the future. What I can see into is where resistance is and what the chart itself, what buyers need to do to confirm for you that there is a likely bottom that is in place. So I'd continue watching ZAG. The problem is I just don't see it as we speak right now. And lastly, on a monthly basis here, just to give it to you, this could be a monthly 9 count. So I think you're on to something. I just think it requires a bit of patience. The last high that formed out here, well, that was on bar number 9. So reason to keep looking for a bottom. And if you see one before I do, please just knock on my door and ping me inside the Tiger's Den. So hope that helps you out with regard to what ZAG is communicating to all of us as we speak right now. Now, Tim wrote in, and Tim must be a buddy of Peter's, because Peter had earlier asked for the seasonal chart. So let's go. If you ask, we'll go ahead and show it to you. And so here it is from the current. Here, Tim, is your seasonal cycle. And what you'll notice is, you know, the sell in May, on an average over the last 87 years, sometimes people think it's May Day, it's May 1st, and that becomes the top out there. On average, that's not the case. The so-called sell in May cycle, in essence, begins around the 3rd week in May, around May 19th. Look, use these dates, if you will, as a, I don't know, as a guideline, right? And so when there's topping patterns that are present, such as the ones that exist right now, today in many of the equity futures contracts out there, we got to be paying attention to it. And that's why the cool thing is that you and I get to look at the evidence. The evidence is presented to us, and that evidence was the bottom of those profiles, the ES Mini specifically, you know, really cool there to let us know whether or not some type of seasonal cycle has begun to kick in. Maybe it's begun, but it has not broken the back of the buyers out there, and that's really what is needed. That's the last ingredient in order for that to really kick in out there. The real seasonal cycle, so to speak, the non-sideways trading, doesn't kick in until July. The end of July, 3rd week in July out there. My date on that chart was July 21st. Again, use that as a guideline. So, Tim, thanks for writing in, and hope that helps you out. Let me see, is there any other requests out here? There's not at this moment. So phone lines are open, email lines are open, although if you send me an email now, I won't be able to get to it because we're going to go to a break in a minute and then do the 2-minute wrap. So, but send them early tomorrow. What else should we look at out here? You know, the New York Stock Exchange, take a look at the market as we speak right now. Doesn't really look too bad. It's kind of a consolidation looking chart for price inside the New York Stock Exchange. The NYSE is its advanced decline oscillator below 0, but not to the over sold level of minus 150. You're only minus 57 out there. You can see the spot volatility index. You can see it's 50-day. That's at 1424. That's the bottom of my screen where it's 1650. 1616 as we speak right now. Steve Rhodes with TFNN. Dow's off 210. I'll make that 200. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the Dow's off 195. That's about 0.75%. The semis. Let's take a look at the semis. They're down a couple of points. Let's try to figure out what the message there is on the daily time frame. At least let's begin there in this 2-minute wrap. So here's the chart for the semis out here, the daily time frame chart. And here's what we know. There's 2 topping patterns that have completed inside the semis. And we know that we got to wave number 7. So that's something that's off of the low from in March the 8th, if you want to go ahead and do your wave count. We also know that when that high was formed out here, this, by the way, is on the day of April 24th, it also got to bar number 8 of that TD setup 9 count. So definitely topping signal that is in place out here. Price is likely, although it is trading back above the B point of an A to B equals CD. That's the April 26 low. And each of these have small A to B equal. When I say each of these, the ES Mini, the Dow, whereas the ES Mini and the Dow show potential for a Gartley buy pattern, and that would only be if there was a bullish reversal candle. Both were displaying a hammer candle earlier. We don't know what it's going to look like at the end of the day. Here, you don't have any kind of bullet. You don't have a completed A to B equals CD. You just have further information that really sellers should be able to push price lower. Now, push price to where? I would say push price down to that TD setup bar. That was the bar from April the 15th. That price level out there, that's the level of support to be watching, be 1477, and just a bit of change out there. So the GDX on a daily time frame giving us a topping signal. Real quickly here, let me switch to my other charts, my weekly charts. Let's just see what the semis are signaling to you and I on a weekly basis. And they're not really signaling a top. And that's really the perplexion, if that even a word, it's not, inside the market. The weekly charts are still really very strong. The NDX is the only one, and the NASDAQ composite, with possible topping signals. Folks, stay tuned. David White's up next. Tom O'Brien, 3 to 5, and I'll be back with you on Terrific Tuesday. Thanks for being here. Have a great day.